most of the time at the end of the week. We have so far faced a bit of a more choppy sideways ranges this week. We're gonna go through the chart as always. You can ask anything you want, okay? So I'm here to help. I'm here to reply to your questions. So don't hesitate to ask anything you want, either technical, fundamental, or anything that you can understand, or you want some help or some like feedback. I will quickly, let me just make sure that indeed everything is working properly. So I can see that there are already 25 people in Facebook, and the sound is great, perfect. Below the live in YouTube and Facebook, you can ask, you can put your comment. I will be able to see it on spot and reply to you as we usually do. Okay, so don't hesitate to to ask me anything you want. Let me just quickly. Okay. So YouTube looks fine as well. Perfect. Perfect. So we are live in every single social media that we're actually have as a forex. Perfect. So we're ready to go. Perfect. Okay, guys, you will allow me just few minutes, okay? Few minutes to make a quick briefing before we start the session as usual, okay? To just a quick summary of what happened so far, okay? So what we have this week, actually, the spotlight, as you already know it, has been on the central banks, and more precisely on the Fed. So we had Fed on Wednesday, we have Bank of England yesterday, and we have Bank of Japan earlier today. So the theme of the week is a pretty much a more firm, firm dollar, firm equity markets. There is a lot of mixed action in the market, and that's pretty much the aftermath of the Fed, along of course with the with some developments in regards to the COVID front, but on top of that is also the talks, the meeting that it takes place, actually started since yesterday, and it continues today as well, between China and US in Alaska and other allies such as Japan and North Korea. So apparently, after the Fed and after Bank of England and Bank of Japan, we have seen that the focus has turned slightly to the meeting, because it was the very first meeting. Actually, I'm not sure whether it happened before, but it's the one that we have that it went publicly. Okay, so that is not something that happens. It's something that happens very rare. Okay, and it didn't really had a harmonious start either. We have seen a very tough stance from Washington, but also from China as well. So that spreads a bit the concerns, and rise the odds that they might the development of this meeting won't be a good one. Okay, so this is something that weighed on the stock markets, especially during the Asia session and the Asia session. Sorry, and that's why we have seen the Australian indices like drifting lower. Why is that? Because Australia is considered to be one of the countries that will be hit on this quite significantly on any breakout of these talks or any negative development from these talks. So the US-China talks continue today. Okay, so the focus is really turning on that direction as we're going into the weekend. So, but for the time being, we have seen some very choppy sideways movements. So I will start with stocks and then move to the the currency market. Okay, but just quickly saying, we have equity futures, US one, European ones, bouncing like with some modest, with some modestly firm reactions. And that's, as I already said, it's on the pressure from the US-China talks, but mainly is due to the spike that we have seen in treasury yields since Wednesday. So treasury yields weighed significantly on equities. There was a huge spike higher on treasuries after the Fed. And the reason why that happened is that even though Fed actually confirm assurance that there won't be any actually new reaction under the policy, they will keep policy unchanged. However, the markets remain very skeptical in regards to the inflation front, and also we have seen some kind of a reflation trades similar with what we have seen the whole year, the whole 2021, from the beginning of the year more precisely. So this is something that actually supports the treasury yields, weights on the bonds, weights on equity markets, and so on and so forth. So that was what is going on today. Actually the whole week. Okay, is the aftermath of Fed, and on the top of that, we have also seen Bank of Japan widening the target for the bond purchase, something that actually shifting the purchase from Nikkei to topics. That's why Nikkei has been shifted lower overnight, while topics have actually appreciated. So that was a quick briefing. Let me double check my bullet points just to make sure that I have mentioned all the relevant bits of all the highlights of the week. But I will, along with the technical analysis, I will try to explain also the reactions in regards to the fundamentals. So, yeah, I think that was it for a quick briefing of what happened. So let's scan the markets. Let's go through to see what else needs to be remains in focus. So I will start actually with the two big movers that we have seen, and I'm referring to metals and energies. So I'm gonna start with oil and palladium. Okay, you might have seen that those spikes that we have seen yesterday on those assets. So just hello, Alex. Welcome. Hello, Adedeji. Hello, everyone. Oh, you're interacting with each other. That's good. Good morning, Lalo. So, okay, perfect. So you are with me. And let me share my MT4, which disappears out of the blue for some reason. Okay, here we are. Okay, perfect. Shift that here. Enable it and disable myself. Excellent. Okay. Excellent. Let's start. As I said, I want to start with oil and palladium due to that big daily candle that we got yesterday, which looks to be significant and retesting some key levels. So let me just quickly, that's the daily chart. I'm sure that you have already noticed that's the yesterday's daily candle, in which we have seen a big decline, nearly $5. Not actually, it's not, it's more than $5 decline and this is something that we have seen yesterday, and there is a bunch of reasons for that. However, maybe the biggest one might be the meeting, the US and China meeting. However, you should be aware that the drop on oil also comes after some the rise in inventories. Also, we is also a pullback on the US yields, but mainly it's all about concerns on regards to the geopolitical tension that we are facing right now. So remember, 2 years ago, we weren't really worrying about COVID, but we had also geopolitics as the hot potato of the year. 2 3 years ago, so we can see that geopolitics are back in focus again, as coronavirus and the pandemic, it looks to be not under control. It's not pretty much under control, but we have vaccines, so we are working on it. Eventually, they will be eventually out of our lives sooner or later. But what is really the case in regards to the oil is that the geopolitical tension is back, something that waited on the oil, okay, especially because it's a public meeting, okay, and nonetheless, we have seen Europe, okay, strict setting tighter restrictions. So after Italy, now France and Germany have actually went back to restrictions and tighter ones in order to save, if I could say, Easter. So this again is something that weighs on the oil because we have the worries of a near-term decline in the demand of the oil, okay, because of the new restrictions. So for the time being, even though OPEC remains disciplined and maintains its tight quotas, however, in the near term, so even though in the overall term, OPEC reaction and the prospect of a reopening of the global economies is really supporting the oil. However, in the near term, the oil turned lower due to the meeting, but also due to the tight restrictions from several European countries. That's why we have seen that dip yesterday. And on the top of that, we have also Russia, which actually is chopping at the bit to increase supply. So, if indeed Russia increase further supply, this could shock a bit the oil. So, have this all in mind, okay? So that was in regards to the oil. Let's see the technical behind of oil. However, okay, so we have some kind of a rounding tops, okay, similar to that one. Again, a bigger range, deep lower, broken the 63 area, which was our near term support in the 20-day moving average, broke that. It came back to February support. So at 58, retesting the 50-day moving average. This line over here is my 50-day moving average. Retested it yesterday. It came above it, close above it, but remains for the time being close to the low area. So it remains below the $60. So you can see, I will zoom in order to show you the intraday picture, but before I do that, you can see that there is some kind of a nice floor over here which remains intact at the end of the week. So the 59, and more precisely the 50-day moving average at 58.48, which coincides with the fractal over here, remains a key support for tonight. So if the asset, it doesn't manage to break a move below and close below that area tonight, then we might see this floor to actually being sustained ahead of the new week, of the fresh week. Okay, we need a break of that level in order to suggest that the outlook is turning negative. For the time being, we remain in a bit of a, if I zoom out, you can see that we remain in an uptrend with a sharp correction, but just a correction and not a reversal sign yet, at least. Okay, this decline also follow with a decreasing positive bias, but the MACD hasn't really turned negative yet. It declined, but it's not negative. And as I said, this is a key support level to be closely watched, especially tonight, on tonight's closing. How the weekly, if you prefer, candle will close. Okay, so you can see this is a support that has been sustained for the whole February and so far in March. Okay, so that was in the daily chart. Let's see the intraday picture. So it had gapped down in the morning. Okay, that was because of the reports in regards to tough stance from Washington and China. And consolidating since then. I think this is clear that um, and so far the Friday's trading is very choppy, sideways, bouncing between 59 and 61 6140 area, and it doesn't look to change even though the momentum is negative. So we have 1, 2, 3, 4 continuous hourly candles lower, so bearish candles. So the momentum is really negative. However, on the US Open, that up tail suggests that there is a big indecision, and suggests that this floor is still strong. So we cannot really claim that it could break that level for the time being, because they are flat as well. So even though they are an overall negative bias, they have been flat, and we need to see a dip below that level. And let's not forget, guys, okay, that um, okay, it's in a ranging market, trading below pivot but sideways. So let me just quickly have a look on the 30-minute chart to see whether it gives us any other hints, but I'm afraid not. We had a bearish cross the 2 hours ago, which indeed came true because it dipped further to the downside, but so far the last 30-minute sessions, the last three candles, is moving sideways. Okay, so what we are getting from that is that the momentum is is like choppy as well to the downside. So um, any move above 60 could reach 6140. Okay, that was on oil, and since we had oil, let me discuss a bit Dollar-CAD as well. Okay, so I'm shifting to currency market. So Dollar-CAD, here it is. It doesn't react pretty much with the with the similar way as oil, but we have seen that it rebounded. So weaker CAD against US dollar the last 2 days. So for all the reasons that I already mentioned, okay, stronger dollar and a firmer so far, but a dollar that has been lifted out of correction lows today, tracking the action of US Treasury yields. And that's why we have a turn of Dollar-CAD to the upside, because it's also we have a decline in the oil. So Dollar-CAD for the time being is turning back higher. It remains below the 20-day moving average. Something that also weighted on the pair initially was the strong employment report out of Canada, but that has been forgotten already, and that's why we have seen this spark to the upside because of the sharp top drop in oil, as I already mentioned. So let's see the technicals. So we have a Canadian dollar that is under pressure, okay, over here, rebounding, and let's see, it's away from the lows that we have seen this week, the fresh lows, because this is, if I'm not mistaken, this is 2 years, fresh 2 years lows. So fresh lows at, okay, at, let me just 2364, 126.34. So that takes us back to pretty much with next support areas in the long term, for those that they are interested in the long term, back to 2017 area. So for anyone that is interested in the long term, it's clear that dollar-CAD remains on a dramatic decline since 2020, since the beginning of 2020, and and any kind of a rebound, it doesn't look to change the picture. This is the weekly chart, so it's clear downwards pressure with some corrections only, well below its 20-day moving average, some corrections before another dip to the downside. So if you are a long-term trader, then the key support areas, next support areas to be found will be back in 2017. Now, focusing on the daily chart, we have similar rebound as the ones that we have seen 2 weeks ago, back in the end of January, back in December, back in November. So it's corrections on the long selling that we have seen on Dollar-CAD. So the safe haven dollars rebound is not really something that change the picture, only near term reactions, because either way uh, the uh, the U.S. Treasury yields remains to the upside, something that will continue to weigh on the equity markets and on the dollar. And let's not forget the inflation, that is a huge concern. The rising inflation globally, um, the big massive stimulus from U.S. that weighted further on dollar. So overall, the theme remains on a weak dollar, US dollar for the year. Okay, but in the near term, we have that rebound. Okay, fair enough, of the lows up to 125.40, but key resistance area to be seen will be the 20-day moving average. So you can see that even it rebounded, but the momentum, the overall momentum remains negative. Okay, so in the daily chart, any kind of a correction is just a correction on this long decline before another attempt to the upside. Now, intraday, okay, nice bounce, okay, rebounded yesterday, corrected in the Asian session, and rebounds again in the European session and ahead of the US session. Okay, actually it already opened, making a fresh high for the week at 124.35, and you can see that in the near term the momentum is very different. The momentum is actually positive and rising. So negative outlook in the long term and medium term, but positive outlook intraday. So we have seen that it bounced on the US Open, strong hourly candle over here, and earlier it was, if you were watching this asset earlier, you had seen that, you had probably seen already this bullish cross of the 5 and 9 exponential moving average in this 1 hour chart, which actually hinted that, you know what, a rebound will continue, will move further to the upside. And indeed it happened, it continues further to the upside, and momentum looks that is still signaling further appreciation, further upwards movement. Let me put my pivot points so we will get a resistance area for the day. So it didn't really touched the pivot point so far today. It provided pivot point provided some kind of support, and the next level, resistance level to be seen on this rising dollar cat is the first resistance of the day at 125.56. The very next one is coming, something that I added manually at 125.50 because it's the 20-day moving average, okay? But if you have pivot points, the near term one is the first resistance, the second is at 126.20. So if the momentum continues rising, the asset could eventually retest the 126.20 area. Now, okay, let me just quickly check something. We have that dip. So yeah, it already recovered more than 38.2% of March dips. Okay, quite significant numbers. So tonight's closure will be significant to see whether it will close above the 50%, because if it does, then it means that the momentum is increasing. So we might see further appreciation of dollar-CAD. So that was on dollar-CAD. I promised that I will discuss a bit about Palladium and what happened yesterday. So you should be aware, guys, that um, let me just okay. um okay, there are some questions. Let me give me some time. Okay, give me some time to reply. But what I wanted to say is that in regards to Palladium, okay, guys, so uh, Palladium, uh, similar to what happened last year as well, okay, is a metal that is an industrial metal, okay, it's a metal that is used as a component of car manufacturing, more precisely electric and hybrid cars. So something that sparked this big weekly candle, okay, this week was reports from actually a statement from the biggest producer in the world, a Russian producer, that there will be a cut on the output by nearly 20%. Okay, so this is the reason. So we have seen that supply is really under um, some pressure. So this is something that spiked. That this is a reason why the palladium spiked higher. So why I wanted to show you this asset is because it managed to break two significant patterns. The first one, the first pattern that has broken this week is this 17 months ranking market, okay, consolidation for 17 months, and it has actually managed to break it for the first time in 17 months, break it in this week. And this area between 2720 and 2120 is significant. Why? Because the top of this range is also coincides with three continuous up fractals, weekly up fractals. So it not only broke that range, the 17-month range, but also the triangle in which it was trading into since January 2020, since the pre-pandemic reaction, so the pre-pandemic season, if you prefer. So this is a big weekly candle. Of course, it hasn't closed yet, and it's already look a bit overbought because it's outside Bollinger's. But a closure above 25.20 this week tonight could actually attract more buying pressure. Okay, because as I said, it's outside, it's broken our that triangle, broken the range, something that is a bullish signal in the medium term for Palladium. Let's see the daily chart. So 1, 2, 3, 4, 5, 6, 7 days to the upside. Strong momentum, strong bullish bias. You can see in MACD, you can't because I'm in front of it. I will post it again. You can see how strong the MACD histograms are. Spike to the upside. Of course, today we have a decline, but this is a correction, or at least for the time being, is a correction because the asset has been trading outside Bollingers, so is clearly overbought for consecutive days. So we needed some kind of a correction, maybe because it's a profit taking because of the end of the week. Most probably is a profit taking, actually, a correction. But you see, it has sustained a move above 25.20. So it would be interesting to watch it again next week, especially on Monday. So intraday now, as I said, is doing some correction, but found a near-term floor 25.96. The momentum is like neutral, so we might see further consolidation because both MACD and RSI have flattened, suggesting that it might continue consolidating sideways until the end, the closure tonight. Okay, that was on Palladium. So now I will see your questions and I will go through whatever you want me to. Hi. How do you determine your tickets? I don't know what you mean by tickets. Maybe you mean positions. I don't understand what you're asking, Lalo. If our positions, I base my everything is based on fundamental and technical analysis. I used to have this kind of setup: Bollingers, moving averages, MACD, RSI, and fractals, and pivot points as well. So a break of a pivot point, a break of a fractal is actually something that triggers attention for a potential position. Hello. How long does it take for a withdrawal? Actually, less than 24 hours, but support is very, very fast. So contact them. They are very, very happy to reply ASAP. They don't leave any client without help. If, so I'm sure about it. If you face any problem, just send us an email or a message to social media or a message in our 24/5 support system. We will be very, very glad to reply to you, Ernest. How one can take immediate updates of these news that caused a spike this week. First of all, you need to subscribe to our channel. Okay, subscribe to our YouTube channel so you will be alert when me and Stuart are live discussing the news. Second, and very, very important, my dear Sammy, always have in mind to, let me show you, to have on your PC, on your browser, open the economic calendar, which I will show you right now. Okay, because I have it 24/5, I have it open. So how can I share it with you? Here we are, share. I think you are able to see it. Yeah, so have the economic calendar in front of you. Always, it should be one of the tabs that you must use in order to be alert, okay? To remain alert. Also, um, you should have also one of either our analysis page on as well, or any kind of news website that you wish. But if you go here in the second tab, we have instantly, every minute that something is happening, this page is updated. Okay, so I use them, but there are also many. Okay, you cannot see it. Let me. Here it is. Okay, so as I said, if you visit our analysis page, it's not solely our articles that they will keep you up to date, but also over here, the called market news. This is updated every minute. So um, just now, this was published. S&P 500 index opens lowers as financial stocks slide on Fed's SLR announcement. So if you have that, the calendar, and the newsfeed stuck as one of your main tabs in the browser, you will remain alert, okay? But as I keep saying, there are many the template is changing all of the time, but never mind. So but either way, guys, there are many free options of how to keep yourself updated. Except from the ones that I already mentioned, we have also many tools for free. But even if you don't want the tools, that's fair enough. Even though we have that premium tools free of charge with some terms and conditions to be met. And this tool actually enables you to have this tab on your MT4. So you see, it's like a second tab in my MT4. If I hide Sammy's comments, you can see it's like a tab next to dollar yen, next to pound. So connect is something that we also have and keeps you up to date. Okay, so keeps you up to date. So don't worry. There are and you can see the calendar as well over here, forex educations, and so on and so forth. Okay, so let me get back to the markets. There are many stuff. I cannot really go through that right now, but they're in our website and you can have a look. Also, since you ask, um, our app, the application, the mobile application, the hot forex mobile application. Okay, I'm not using my mobile phone right now to show you, but our mobile, actually I can. If you download, guys, our application, okay, you will get notifications on spot when there is a spike, big spike on any asset. We have an automated system that scans the market and send push notification through our hot forex mobile application to you and and let you know that Palladium spike to 25,000. Gold drifted to 1700s and so on and so forth. So if you have the mobile app, you should enable the notifications so you will be alert every time that a spike is seen. Okay, so I strongly you should have a look. Uh, you should actually have a look at it. I would like really to show you if I allowed, if I can manage. So this is, I'm not sure, no, you cannot see that, but these are the notifications, several notifications, okay? And it buzzed me, like, ding ding, oh, Dollar-CAD takes a ride, currently at 125.19, and so on and so forth. So many options and many more, which I cannot really reply right now. This is a technical analysis session. So, someone is spamming me. What about gold? Okay, someone that actually asked about something. Okay, gold. Gold, non-yielding asset. Don't forget that, guys, non-yielding asset. So we have seen gold appreciating the last 2 weeks. However, it's stuck, my dear Hassan, on the 20-day moving average. And that was quite reasonable because despite the um, despite the fact that because it's a non-yielding asset, okay, it found some buying pressure because a non-yielding asset. However, the overall outlook for gold, so if I take you back to the weekly chart, the overall outlook hasn't really changed. The overall outlook is negative. We have seen it declining continuously since the July 2020, and what was key is the fact that it managed to break this support area at 1750, something that happened at the end of February. It break it and moving below it, bringing actually retesting support areas that haven't been seen since April 2020. So it reverted all the gains that we have seen in a year. So the overall outlook remains negative. And if you can see, I will zoom in a bit. Can you see that finally my 50 exponential moving average cross above 20 moving average? This is another confirmation, another suggestion that the pressure remains on gold, that the outlook is increasingly the bias is is negative and continues to attract more negative bias. So the negative bias is rising. So this will be very, very interesting. We need to, on Monday, I will double check gold to see whether this cross confirmed. Because if we have the 20, which is our short term moving average below the 50, that is a bearish signal for the medium term picture. And okay, so you see how far away is from the 20-day and 50-day moving average. This is a weekly chart, so I will shift to the daily chart. You can see the daily chart that it's stuck in the 20-day moving average, but it didn't really seen any progress. So if I just like plugging a Fibonacci, okay, for the whole year, 2021, so January, February, March, you can see that it barely managed to recover 20% of the losses, which I remind you the 23.6 Fibonacci level is not a reliable retracement level. It's very, very weak retracement level. So most probably um, um, as I said, as long as we don't see a move above 38%, then we don't really expect the goal to change outlook from negative to positive. So the outlook remains negative because 23.6 is not a strong retracement Fibonacci level. And is struggling to overcome that barrier, struggling to post another high, struggling to move further to the upside because momentum remains negative. Let me show you MACD clearly. So you see, it's negative. RSI is below 50. Consolidation below 50, suggesting that there are more bears in the market than bulls. So let's see so if we see a turn back down again below the 1700s, then there are next support is at the low of the year 1669, and a break of it could open the doors further to the downside and more precisely to 2020 levels. So that will take us down to the latest down fractal, so it will be 1570 area, just for you to be aware. Intraday now, consolidation ups and downs after that dip that we have seen on actually yesterday, a dip um, down to 1718, recovered, struggling to move higher than 1745, turned back down to its pivot. The fast MAs over here are ready to to cross bearishly, but they haven't confirmed something like that. So let's see the 30 minutes chart. So they have crossed, but they have found some kind of a support over here. So consolidation remains the theme, I'm afraid, for gold as well, even for the 30 minutes chart and the 1 hour chart. Okay, so if it breaks that latest two lows over here at 1730, then the next support will be on the low of the day at 1728. If I put the pivot points, oh, there are on, sorry, my bad. So a break of that, open the doors to 1718. So hopefully I replied to you, Hassan. Hello everyone, hello. Hi, help me from my work, please. I think this is what I'm doing right now. I'm helping you, giving you some analysis, technical analysis. So I'm not sure whether that's enough, Osama. If you need any further assistance, please contact us. Please contact our support team. And if there is something that I could do, they will let me know. Okay, thank you. So, guys, I don't see a lot of questions. You don't want me to cover any kind of asset. If not, I will go through as usual the most important assets of the in the markets, and then I will close the session. Since I don't see any questions from none of the social media that we have. Okay, so we have discussed gold, we have discussed palladium oil, dollar-CAD. Let me quickly see S&P 500, which dipped significantly on the US Open, posting another fresh low. So can you see that? So if I put the 1 hour chart, you can see that it continues this dip since yesterday. Uh, since yesterday. Okay, so since Wednesday, so the decline continues, and we had a bigger hourly candle on the U.S. Open, and let me double check whether so. Okay, overall, the U.S. stocks open a bit mixed. However, in the near term, they are on a strong downwards pressure. Okay, for the near term, for the 1 hour chart, for the day. Okay, near term for the next few hours as well. So that dip is actually set due to what I mentioned earlier, due to the announcement from Fed that they won't extend the SLR exception. So actually, what is a SLR exception? So is the supplementary leverage ratio. Okay, so the Fed announced that treasury the rules that they have around the buyers of treasuries and the holders of treasuries in regards to the leverage ratio will expire at the end of the month. So it means banks will have to hold more loss absorbing capital or sell their bonds because the Fed won't extend won't extend uh, uh, the holding, if you prefer, of the treasures. So this is why we have seen stocks drifting lower. So on this announcement, we have we have seen actually stocks under pressure because a lot of dealers that holding data released yesterday as well, on top of the fact that there will be a selling of more than 80 billions in treasuries over the past 2 weeks, including a record of 64.7 billions in selling 2 weeks ago. So after that, we have the SLR expiration, which Fed will not extend it, so this will trigger more and more and more selling of bonds from the big boys, from the bond dealers, from the banks, the big banks in the world, and etc. So that is what explains that big dip that we have seen in the S&P 500 and other US stocks just an hour ago. While on the flip side, dollar actually climbed on that announcement. So before I show you dollar, S&P 500 remains extending lower. Momentum intraday remains negative and continues to be negative. So can you see that a bearish crossover here? This suggests that there is a lot of bearish pressure, selling pressure, and it might continue for the next few hours. So big dip. Okay, big dip down, trying to recover, but the tails are big to the downside. So let's quickly go through, let's go to the 30 minutes chart. It might help further. So down, oversold in the 30 minutes chart. So unable to move back higher again. So and the MACD is extending further to the downside. RSI has further steam to the downside. It has further area to be to cover to the downside. We have a bearish cross of MACD of moving average that they keep pointing downwards. So the intraday picture for stocks and for the S&P 500 over here remains negative, remains bearish. Let's quickly see pivot points, and we have below its pivot, just retested the first support of the day. So a break of the first support of the day could see further dip to the downside at 38.62. That was S&P 500. So let's go to the dollar index. Dollar index appreciated on that announcement. It found support. It spiked higher, 92.16. For the time being, so dollar actually climbed after Fed to 92 area. So that wasn't a result of the higher yields as well. So so let's see what's going on over here. Up 92 key level to be seen, because it was the week's resistance, but also a round number. So a break, and you see it coincides with this fractal over here, up fractal over here. So a move above 92.16 today could found dollar higher at 92.60. Key resistance area, near term area 92.50, sorry, for tonight. Okay, so let's go intraday to see what I mean. So rebounded, sustained a floor above 91.64 so far today, rebounded again and posted a new fresh high. And if that continues, because MACD is also rising, so we have more bulls coming into the market. You see that we have a bullish cross. RSI also higher, but a bit skeptical to break that 70 area, but remains higher. So if the asset managed to sustain a move above 92, so even if it dips lower, as long as it doesn't move below 92, then we could say that the outlook, the near-term outlook for the next few hours remains positive, while an extension above 92.16 could open the doors on 92.50 territory. That was on dollar index. Euro dollar and cable. Euro dollar dipped further to the downside, broke the first support of the day, posted a fresh low of the day at 118.73. And if I put also, can you see how aggressive to the sharply to the downside the fast MAs are pointing? So there is further pressure because first it's below its pivot. Second, the fast moving average are pointing to the downside. MACD is negative and continues being negative and extending lower. RSI is flirting at 32. So all these suggest that there is a lot of selling pressure for the day, intraday, for the next few hours. And this is a big candle that could find further selling pressure. Intraday, however, again, for the day as well, remains actually a bit neutral for in the daily chart, but intraday is under pressure. Cable, bigger dip today, continues dip for the last 5 hours in a row, already broken the second support of the day. Actually, cable printed a 2-day low today at 138.25, okay, which is both the culmination of over a big figure decline from intraday highs and the correction low from 1 week highs that was seen yesterday just above 140 area. So is the dollar firmers along with the dollar with the US treasuries a boost that pulled a pound lower, okay? um, so sterling looks to has actually extend the correction against all the currencies, against euro, against dollar, against yen as well. So yeah, sterling is down on dollar and yen for the week. But in the overall picture, taking a step backwards, the pound remains the strongest of the main currencies for the year so far because Brexit is out of the way and has anyway discounted more than 2 years ago. The UK is doing great on vaccination. More than 47% of the adults vaccinated already, in contrast with Europe, okay, and US, of course, which just started vaccinating people, and also the UK is one of the few governments that actually reopening from they have reopening the economy from the restrictions, and they are being consistent with a slightly stronger economic outlook for consumption growth in the second quarter of 2021. So overall, pound remains strong and is expected to continue being the strongest currency of the year in the medium and long term, okay? So daily, weekly, monthly charts. Now, intraday has been one of the weakest with a sharp dip over here, as you can see, 138.29, the low so far, and it's keep extending to the downside because we have three big candles. So that's something that suggests that it will continue moving lower as MACD increases. RSI is sloping lower and just ready to cross 30, and there is further steam to the downside. Moving average are sharply lower, so there is further steam to the downside. So the next support comes at 137.77. So keep an eye on pound. Okay, so 137.70 is back to 5th of March support. Okay, is the February's and March support, and this is a big candle, so it could retest that area today. Good evening. Thank you. Oh, thank you. So yen, let's see yen. Okay, guys, yen. So yen, we have seen that actually yen was a bit of ups and downs all the time, but what is important is that it lifted to 109 areas this week. So the yen has seen some outperformance, okay, due to the big differentials, the narrowing of US over Japanese yield differentials. You know that the yield differentials reflect, also give us an indication of currency market. As narrow as the yield differentials between two countries, then the bigger the move will be to the corresponding currency pair. So over here we have a narrow we have seen that the US and the Japanese differentials are actually narrowing. Okay, so this actually supports the dollar yen. Okay, uh, and the backdrop of the decision actually by the Bank of Japan to widening the target band under its yield curve control policy and remove its explicit target on ETF purchase is giving the central bank extra room to draw in stimulus, and is with this way the gap is narrowing in the yield curves. So this is something that, as I already said, is actually supporting dollar yen. However, overall, we have seen that after this 3 months rally, the dollar yen stacked between, stacked actually is facing strong resistance at 109.30 area. So this hasn't really changed the past 2 weeks. It's moving sideways. So as long as we don't see a move either above the 109.35 or either below 108.30, then there is no clear direction of dollar yen for the daily chart. A break of 108.32 could open the doors to 107.60 or even 106 area. A break of 109.35 on the other side could open the doors to 2020 highs. Okay, so intraday now. As I said, it was ups and downs, ups and downs. For the time being, it rebounded from the lows of the day, which coincides with the first support of the day at 105.60, rebounded, broke the first resistance of the pivot point of the day at 109, but quickly turned lower again. So this is a good 1 hour candle, strong one, reverting last session's lows and last session candles. And if I consider the negative MACD and the decline in RSI and the turn of stochastic, the bearish turn of stochastics, looks like that the dollar yen will resume another retest, another decline, and to retest again the first support of the day. That was on dollar yen. Guys, I'm running out of steam. I think I'm going to close the session. I already covered I have covered gold dear Shafi. Overall, just to quickly let you know, overall gold remains under pressure intraday and in the overall picture actually. Stocks under pressure, Palladium, the industrial metals are finding support, oil under pressure, dollar found some ground and is extending higher, yen is also found some ground and is actually strengthening for the time being, but the overall picture looks to be like stuck below 109.35, and that's pretty much it, I'm afraid. If you don't have any further questions, I will close the session. So just quickly for gold because Shafi asked for it. So as I stated earlier, the near-term picture is sideways, moving sideways between the 1728 and 1745 area, but overall nothing changed. We have seen a bounce the last few days, but is actually is struggling to move above the 20-day moving average and the 23% of that dip that we have seen for the whole year. So overall, the outlook remains negative for gold, my dear Shafi. So that was from me, guys. Hopefully, I managed to cover everything. I would like to wish you a great day ahead. Take care. End of the week. Make sure that you close any unwanted positions and take care. Risk management, first of all, position management as well are crucial, especially nowadays that nothing is certain. We are facing a lot of economic and political uncertainty and health uncertainty actually the last 2 years. So take care. Hope you're having a great day ahead and a great weekend ahead. And I'll see you again next week. Thank you very much. Bye bye.